I'm curious to know what impact GameStop and this Reddit rally has had on ETFs, inflows, and where investors are potentially taking some profit. Let's get a take from John Caulfield. He's from VanEck, here with us live at Barangaroo. John, welcome. So,
thank you very much.
Yeah, how has this whole Reddit rally been playing out in terms of ETFs?
Yeah, look, fascinating to watch. I mean, it's I guess a retail sort of cohort acting like a disaggregated hedge fund and taking it to the hedge funds. I mean, in terms of ETFs, how it's impacting them, there are only a few, I'd say a handful that have exposure to the stock anyway, so you're going to see some appreciation within that. Obviously a very outsized position in some now. I mean, nothing that we manage sort of holds that stock. So we haven't been directly impacted. We have seen in the US, I think, some of the institutional investors to try and get hold of some of the actual stock, buying the ETF and then redeeming shares in the ETF and taking delivery of that in specie, which is quite a unique way of getting hold of stock, which is obviously pretty hard to get your hands on at the moment. Look, we would always say just take a diversified approach. We offer a gaming ETF, which doesn't own that particular company. It's done all right in January. Flows have been good, performance has been good, and you certainly don't have that risk of the single stock exposure.
Yeah, presumably, just to interrupt for 1 sec, you didn't have GameStop in that ETF because it wasn't a business that was considered worthy.
Absolutely. I mean, our particular strategy looks at the top 25 in that sector, subject to a few revenue thresholds, and it obviously wasn't on the radar.
Yeah.
Whether it stays where it is now long enough to be on the radar, we'll wait and see. I mean, most of those ETFs and indices rebalance in March, so we've got a little way to run yet. But yeah,
going to have to be a big turnaround story fundamentally at GameStop.
Absolutely.
Let's move from squeezing stocks to squeezing silver now. I'm looking at my screen here. Silver price is currently up 6.5%, was up 7.5% at 1%.
Yeah.
When you talk about flows, I've got to ask, anything that's linked to silver, have you seen any evidence to date that things are getting a little bit hot there?
Oh, I mean, look, silver and gold obviously quite interlinked. We focus quite predominantly on the gold market, and we do see flows into gold-related ETFs. And despite the gold price having come off a little over the last month or two, I don't think we've actually seen that reflected in flows. So I think, silver, probably relative value, people are seeing a bit more there. You do get, like I say, a bit of that silver exposure caught up in the gold miners as well.
I'm curious, apart from GameStop and everything that's been going on over the past week, we embarked on 2021 with a big focus on emerging markets,
yes.
That there would be a lot of opportunity in emerging markets. So are you seeing, or where can investors gain exposure to emerging markets via an ETF? Is that a thematic that you're on at VanEck?
Yeah, absolutely. I mean, international equities, were the story of the back end of last year, where, as I'm sure you've heard, flows and performance were very strong. That's continued into January. It probably hasn't been too broad in terms of that international equity piece. Specific sectors, healthcare is one we've seen some good flows into, particular countries and regions like emerging markets. I mean, with Biden now in and US politics a little more settled, monetary policy is going to be, as she goes, I think for a little while yet. Fiscal, the size and timing we're a little uncertain of, but I mean, it's certainly going to come through. And it's going to help, and all that means is emerging markets benefit, from that stimulus on the US side. That's applicable to equities and debt. So we have EM equity products, but we also have an active fixed income strategy giving exposure to emerging markets, where you're getting some of the highest real yields in the world. And obviously, developed market bonds now serve a purpose in the portfolio, but don't really tick that income box any longer. And emerging markets certainly can. And with weakening US dollar in that whole mix, it bodes well for emerging market currencies. And like I say, that's applicable on the equity and the debt side.
Yeah, there's been some huge inflows into to mainland Chinese debt in particular, so one to keep an eye on in the year ahead. John Caulfield from VanEck, fantastic to chat. Speak soon.
Fantastic, thank you.